Something massive is unraveling in Europe's most quietly wealthy nation, and almost no one's talking about it. Denmark, the Scandinavian powerhouse often praised for its stability, social safety net, and innovation, is facing a financial tremor that could send ripple effects across Europe's markets. One single company, Novo Nordisk, has lost nearly $100 billion in market value, dragging down GDP forecasts, household wealth, and investor confidence. But here's the twist. This isn't just a pharma story. It's a hedge fund opportunity in disguise. Welcome to a crisis billionaires are already quietly capitalizing on. In today's video, we're diving deep into the hidden economic fault line beneath Denmark's surface. A nation that seemed untouchable just months ago. You'll discover how one company has become so big, it can make or break the country's economy. Why hedge funds are circling like sharks, and what you, as an investor or high net worth strategist, should be watching right now. We'll also uncover how this situation mirrors other collapses, like Credit Suisse and SVB, and how offshore players are maneuvering to turn this local problem into a global profit play. Stick with us till the end to get our exclusive breakdown on which sectors might bleed next, and where the hidden alpha lies. Denmark is rarely in financial headlines, and that's for good reason. It boasts a AAA credit rating, low unemployment, high productivity, and world-class social infrastructure. But behind the scenes, its economy is more fragile than it seems. Much of its growth in recent years has been built on the shoulders of one corporate titan, Novo Nordisk. Known for its life-changing diabetes and weight loss drugs like Ozempic and Wegovy, Novo has transformed into a $500 billion pharma behemoth. In fact, in 2024, it briefly surpassed LVMH as Europe's most valuable listed company. But what happens when Goliath stumbles? Denmark's GDP contracts, banks get nervous, and the entire export engine misfires. In Q1 2025, Denmark's economy shrank by 1.3% quarter on quarter, its steepest contraction since the pandemic. The primary culprit? A slowdown in pharmaceutical exports. More specifically, Novo Nordisk's declining earnings, pressured by intense competition in the U.S. weight loss market, increased generic alternatives and rising production costs. Nykredit, one of Denmark's biggest lenders, slashed its 2025 GDP forecast from 3.5% to just 0.9%. That's a nosedive. Worse still, analysts warn that Novo's troubles could gut Denmark's trade surplus, impact interest rate trajectories, and even shrink public investment in science and welfare, because so much of it is indirectly funded by tax revenue from pharma dominance. Let's zoom out. Why does this matter to global investors? First, Denmark isn't isolated. In a global economy, when a top European player like Novo Nordisk falters, it creates valuation shockwaves across ETFs, pension funds, sovereign wealth holdings, and even ESG portfolios. Secondly, Denmark's financial institutions, though resilient, are now facing capital pressure, according to EU-wide stress tests. If Novo continues to drop, household wealth in Denmark could contract sharply, leading to lower consumption, a credit squeeze, and even a political reckoning over welfare sustainability. Most importantly, it creates a vulnerability in the European equities market that high-frequency hedge funds, distressed asset vultures, and macro investors are already mapping. But here's the shocking part. Despite this collapse, some analysts still predict Novo's profits to rise toward the decade's end. How? Through AI-powered drug development, aggressive vertical integration, and exclusive deals with emerging markets. That's created a deep split among hedge funds. One camp is shorting Novo hard, anticipating more downside in Q3 and Q4. The other is loading up on long positions, betting that this is just a correction. Meanwhile, private equity firms are quietly bidding on Danish medtech startups at discounted valuations, assuming this pharma panic is temporary. Offshore wealth advisors are redirecting clients toward Luxembourg and Singapore-based instruments, with Denmark exposure but FX hedging. The battlefield is complex and lucrative. So how are billionaires reacting? First, they're moving fast shorting Danish indexes, particularly the OMX Copenhagen 20, which recently dropped 0.8% with Novo alone, losing over 2.27% in a single day. Second, they're diversifying into European sovereign debt and hedging with USD, to minimize krone volatility. Third, they're deploying capital into niche sectors like Danish AI healthcare crossovers and offshore pharmaceutical logistics, which are now undervalued due to Novo's shadow. Some are even using structured products to bet on the recovery and downside simultaneously. Think long straddles, volatility-based ETFs, and pharma-specific derivatives. It's not just about Denmark anymore. It's about reading the global chessboard. Denmark may look like it's wobbling on a single leg, but this moment is less about collapse and more about recalibration. If you know where to look, this economic stutter could be a generational wealth moment, but only for those who act before the headlines catch up. So ask yourself, are you watching the smoke or already cashing in on the fire? Hit like if you want more macro insider breakdowns like this. Subscribe for our next deep dive into how European pension funds are stealthily betting against their own currencies. And drop a comment. Do you think Denmark will rebound, or is this the start of a bigger EU contagion?